Okay, I think we are 2 minutes past 3. So let's get started. Welcome everyone, and thank you for joining. It's great to be able to have this forum. Today is the Microinsurance Network is hosting an expert forum, and as part or as an outcome of the ongoing MSME best practice group that has been ongoing for nearly 2.5 years now. And the purpose of today is to share some of the learnings from that forum, and then in particular to focus on interesting discussion with some of the players who are actually operating in the market. So we have a nice pithy title for today's session, but the real objective for today is to discuss the opportunities to offer MSME insurance or insurance and related products to MSMEs with partners, who those partners look like, what their needs are, what the incentives are to partner to offer insurance, and how those partnerships can work most effectively. So a little bit of housekeeping. Today will be 1 hour, so from 3 to 4, and we'd appreciate if everyone themselves on mute. I think that's largely standard, except for the participants. The session is being recorded, and a recording will be made available after the event. There's also simultaneous interpretation. So you'll see at the bottom of your Zoom screen, there is a button that says interpretation. You should click on that and either select English or Spanish, depending which language you're most comfortable in. And then interpretation will be conducted in real time. And then lastly, please, we would welcome any questions that you may have. Please use the Q&A function for questions, and share as many and as frequently as you would like. We'd love to have this discussion as interactive as possible. So briefly, I'm going to give a little bit of background into the session before we hand over for a really exciting panel discussion. So I think we all know that MSMEs are the backbone of economies across the developing world, but they're also highly vulnerable and they don't use insurance. So as much as MSMEs are really important drivers of economic activity, employment, contribution to GDP, they have high failure rates. And despite the fact that they face this range of risks, very few of them have any form of substantive insurance, despite the apparent obvious case there is for insurance. And that should indicate strong market opportunity as well for insurers to reach this target market of enterprises that have a need for risk management mechanisms or resilience mechanisms, but don't currently see insurance as that solution. And there are a number of challenges for insurers to serve MSMEs. They are a challenging market to reach, and that combined with the fact that from what we've seen, many MSMEs don't see the value in traditional insurance products because they're not well tailored to their needs because of the challenges that insurers face in tailoring their solutions to MSME needs. We do see the outcome being this low uptake, but that doesn't need to be the case going forward. And a big part of what the working group or the best practice group has looked at over the last couple of years is to try and identify successful examples and principles for success to enable MSMEs to be more deeply and better included with better designed insurance products to mitigate their risks and improve their resilience. And obviously, as mentioned, this is both a development opportunity, but also a significant commercial opportunity for insurers or other providers of insurance that can unlock this opportunity. So we've identified 3 key principles that are important to success in designing and distributing insurance products for MSMEs. So the first is to focus on value chains to tailor and distribute solutions. A major challenge that most insurers face in targeting the MSMEs is that MSMEs are not homogeneous in their nature. So an MSME solution or an MSME strategy doesn't really make a lot of sense if you're trying to design tailored products for specific risks and specific needs of different enterprises. But there is also not a sufficient business case to tailor products on a case-by-case basis for individual SMEs. They're simply not large enough. So one of the ways in which to manage that and to find groups of enterprises that have a similar set of risks and a similar set of needs and can therefore be targeted as a target segment to sell the same product is to look at individual value chains that look at that target enterprises that are engaged in similar economic activities and have key aggregation points embedded within them in order to reach. So traditional value chain functions in that way. There's natural aggregation points that bring together the enterprises within that value chain together, and the enterprises operating in that value chain typically engage in similar economic activities and therefore face similar risks. So the first principle is to consider looking at value chains as a more targeted way of segmenting the MSME target market and then designing tailored solutions or tailored products for enterprise within individual value chains. The second principle is to consider risks holistically. So insurance is quite a narrow solution. It helps to respond to a risk once it's happened. But in most cases, insurance policies are designed to deal with a specific risk. A fire insurance policy covers the risk of fire. And even if you take that example further, a fire insurance policy covers the financial impact or the bulk of the financial impact after that fire has happened. But it doesn't fully cover the loss of earnings that happens during that period of time, which takes to rebuild. So insurance almost never fully covers or almost can never fully cover the extent of the risk that is faced by an enterprise or indeed with most risks. And so rather thinking about risks holistically provides a more comprehensive solution to enterprises that are looking to mitigate their risks. So again, if you can prevent the fire happening before it happens, like through a fire sensor, it is a far better mechanism for enterprises to deal with the risk of fire than to only rely on insurance. Furthermore, those early warning systems or risk mitigation mechanisms help to reduce the risk for insurers. So in principle, there's a strong win-win situation there, and one that we do see emerging in certain sectors, particularly in more developed markets and in emerging economies. But in lesser developed countries, I think there's, and in many sectors, there's significant opportunities to expand the proactive risk management and value-added solutions that are bundled with insurance policies and are mutually supportive in that bundling. And then the last is to make the solutions tangible. And this does link quite nicely with the point about adding additional solutions that make risk to consider risk more holistically. If you offer a fire sensor together with a fire policy, the enterprise, the retailer that purchases that fire sensor then has something tangible that they can see helping them to mitigate their risk on an ongoing basis. And we know that tangibility is one of the real challenges with insurance because you're selling a promise. And poor claims experience over time across many countries, across many markets, has undermined trust in insurance quite extensively, particularly for enterprises who are often, enterprise owners are often amongst those who have engaged most actively with insurance policies or insurance in some form or another in many economies, but have recognized or have experienced such slow claims payouts that it doesn't help, for example, to manage their cash flow. If it takes a year and a half for you to receive your payout after a fire has happened, your business is long dead. And that payout doesn't really help you to remain resilient. So it's really from experience that there's this strong perception against the value of insurance amongst enterprises. And so tangible solutions help to overcome that, as well as to add additional value adds to the core insurance offering that is provided as well. So with those three principles in place, it's not possible, it's almost, or I don't think would almost ever be possible for insurers to offer that kind of holistic solution purely by themselves. And so we need to think about partnership. Partnership is not something new in the inclusive insurance space. In microinsurance, we know partnership is absolutely central to the success of many of the more successful microinsurance products that have been launched and sold into markets. But what is particularly interesting with MSMEs is that we're looking at partners for aggregation, but we're also potentially then looking at partners for value-added services to help add that tangibility and to add those risk management solutions. What we've identified in the best practice group is 3 key types of partners: lenders, value chain aggregators, and digital platforms. This is not the complete universe of potential partners to support insurers to develop appropriate, well-designed, and distribute those products to MSMEs, but they are 3 of the most important. And they provide real opportunities to both leverage the experiences of these partners who operate much more closely to end clients than most insurers do. So to leverage that experience and leverage that information, leverage the data that is increasingly connected through technology-enabled providers, to design, to understand consumers better, tailor products accordingly. Secondly, these providers can then act as distribution partners. They're the ones with the who touch the MSMEs most directly. But then what is important, as with any partnership, is that the solutions need to speak to the needs both of the end consumer, but also of the partner. So ensuring that the incentive structures are right and that the insurance policies help build resilience in a way that also contributes towards the core business of these partners is important to ensure the longevity of these types of arrangements. And so that is really what we focused on over the last year within the best practice group, and will be the focus of the rest of today's discussion, is what is required to unlock these opportunities for partnerships. At the end of 2020, we published the first note for the best practice, where we articulated some of our thinking and discussions within the group around how we rethink the approach to ensuring MSMEs. But today, I'm really excited to share, and I'm sure that Hugo and the rest of the Microinsurance Network team have shared already in the chat, the links to the 3 publications, the 3 notes that we're publishing today. Each one focuses on one of these key partners: lenders, value chain aggregators, and digital platforms, to identify and articulate the opportunities to partner with these types of these different potential partners, and what makes those partnerships, or what could make those partnerships tick. How do you align incentives? What are the key requirements for each of these types of partners that would need to be considered in designing these? I should also mention that all of these notes have been done in collaboration with the GIZ, Cenfri, and the ILO's Insurance Impact Facility. So it's been a great partnership to work across the different organizations and share the learnings, as well as, and primarily then, build from what we have learned through the best practice group and all the participants that have been part of those discussions over the last couple of years. So today, we're now going to shift into a panel discussion to further discuss some of the dynamics that play out in some of these partnerships. And I'm really excited by who we have on the panel today. But let me hand over to Gregor, who is going to introduce the panel and help facilitate the discussion with Natalia and Lou.
Jeremy, thank you very much for setting the scene and for this quite comprehensive summary of what we've done in the past 2.5 years and what we are going to discuss today. First things first, let me briefly introduce myself. I'm Gregor Sahler. I'm the lead in SME finance and sustainable investment at a sector program called Financial Systems Development, Sustainable Finance and Investment at GIZ. Okay, I hope this was the longest sentence today. Before I will turn to our 2 distinguished panelists, let me remind you once more, as some have already done, if you have any questions, please feel free to post these questions at the Q&A box, and I'll be happy to pick these up during our discussions. Now, let's turn to the panelists, and I would like to start with Natalia. Natalia Silva-Nino is a lawyer specialized in civil liability with an emphasis in finance. She's working as SME business manager at Seguros Bolivar in Colombia, where she seeks to develop products and solutions that generate value for Colombian MSMEs. Natalia, welcome to the panel, and thank you in advance for your time. Natalia, let me first ask you to introduce a little bit Seguros Bolivar. What is it that Seguros Bolivar is? What are maybe the core lines you are working at? And then, of course, also, can you give us a brief first glimpse on the work you are doing with small businesses?
Claro que sí, Gregor. Un saludo a todos mis compañeros.
Of course, Gregor, my greetings to all my fellow panelists. It is a pleasure for us as the Bolivar Insurance Group to be here, to having been invited to this panel. This is a very interesting topic for us, which is the work for MSMEs. They are the engine of economies in every country. And just as you mentioned, it is important. We are going to share some flashes with you to see what we're talking about, what we're working in our group in Colombia. Just a second. I want to pull up a brief introduction, but otherwise, if I cannot do it, I'll just do it verbally. We are the third economic or most relevant economic group in our country. We have different portfolios. The group has an investment bank portfolio with its main bank, which is the Banco de la Vivienda. Then there's a second part in our services that are focused on insurance. So we have life, general, and then special characteristic insurance, which is anything related to income. And then we have another position that has to do with other services. These services are for construction, among others. Then I'm going to show you that we have more than 25,000 employees in our group. We are also the first company in terms of assets in Colombia. Then we are also very much interested in our clients, and that's the main message we want to convey. For us, it is important to see the needs of our clients, and based on other clients, we build our services, and then we holistically support our clients in their activities. From there, we have this interest of being able to serve those MSMEs and support them in their activities that they're doing on a daily basis.
Thank you, Natalia. I mean, you already touched a lot of things. I hope we have time to zoom in later. But let's stick first to your general approach to serve MSMEs with insurance. So I think one of the products, or maybe the main product you have, is called Tranquilidad Pymes. Excuse my Spanish pronunciation. How does this specific cover work? For example, what risks does it cover? And also interestingly, how do you distribute this specific product?
Well, that is a very nice business case, and you said it perfectly. It's Tranquilidad Pymes in Spanish. Well, that's precisely what we're looking for. Tranquilidad in Spanish means peace of mind, and that's what we want for our MSMEs. This insurance could be traditional insurance. They support the MSMEs in their physical world, offices, assets, etc., against risks. The risks that you mentioned, drowning, theft, fire, etc. But then we also have one single offer, and that offer will cover all the risks and also emerging risks, because we know that some of the risks are not necessarily the ones that they see. There could be some risks that could put these MSMEs at risk. And I'm talking about cybersecurity risks. These two products that cover all these type of risks, which are physical and digital, are called Tranquilidad Pymes. These are special, they are prepaid, they're digital, and they are available and they're affordable because we have the different possibilities for the different economic possibilities of the different segments of the MSMEs. There are 3 different options according to their budgets. The distribution channels are our main partners, which is the bank, our bank. Our bank already has a captive MSMEs portfolio. Then we also have the traditional distribution channels, what we also call the brokers or intermediaries. And then we have a special channel. It is an exclusive task force dedicated to doing this. So we also look at the interest of the group in positioning this offer for MSMEs so that they can grow and be sustainable.
Thanks, Natalia. I mean, that's quite a good position to be in a group that already has a financial institution and an insurance company embedded. Maybe one more question before I turn to Lou for now. In relation to other insurance lines you have, what kind of how high does insurance for MSME rank? Is it more like a niche product, or is it well quite central to your strategy and also according to the numbers?
Fíjate que
Well,
ahí voy a contarte cómo
I am going to tell you what they say, something. Let's share the value. Most of our portfolio members are micro companies. We think of products that are going to be created for the smallest companies, so small and medium. For the medium companies, they will have a little bit higher premiums, but then they were bought by micro companies, and therefore over 50% of our portfolio is micro companies, and therefore we have different premiums. So our premiums would be like $400 per insurance, maybe a little less. So we have different products for all the sizes. So we have prices that will be tailored from our business intelligence. That's why we call it pre-subscribed. It takes into consideration 2 important factors. One is what is their business activity, and the second is the location. And that is sort of a recipe. There are different ingredients that we mix, and then we find out what's the price for yourself. Therefore, we have premiums ranging from $300, $400 to, well, depending on the size of the MSME, bigger MSME, bigger insurance.
And to maybe link that into a question that Lemmy has posted in the Q&A. Do you make a difference between micro enterprises and small and medium enterprises in your strategy, or do you mostly target micro or very small enterprises with your insurance product?
Pues siendo totalmente honesta.
Well, to be completely honest, we were more of looking for small and medium sized. But then we have this beautiful business case in which micro companies started looking for us, started hiring our products. So this is very interesting, because apart from the price, the most interesting thing that we offer them and that makes them think that we are necessary for the business, we somehow add value to them. And then we understood that by making this very simple language product, by offering this product in a way that the salesperson can concentrate on what they know best, which is selling. They talk to the client. They understand the client. They don't just explain the product technically. We just left that aside. So if you ask me today, how did you start? Well, we started aiming at the medium-sized company market. But today we have a bigger share in the micro companies. And now we're trying to support the micro companies. And that is why today we're updating our products and our offers so that we know better our customers. Just as we did it through different types of technologies, we want to continue supporting micro-sized companies. They are very important. We are providing them with another type of technologies, artificial intelligence, and other tools that are going to be available very soon.
Thanks, Natalia. That's quite in line what we have experienced. So that there are a few offers around the world, specifically targeting micro businesses. But as higher you get on the size level, the fewer offers or products you can actually see. Let me turn to Lou now, and of course we'll be coming back to Natalia as well later. I'm very honored to introduce Lou Schulman, who has been quite through some odyssey to be with us here today. Lou is a dynamic, innovative social entrepreneur, taking his experience over a very diverse career, I would say, and applying his experience to help develop scalable solutions to global social issues. Lou is chairman of the board and founder of iBuild Global, and also chairman of Karimi International, a Kenya-based agtech startup founded in 2019. Lou, I think you brought some slides to introduce iBuild Global to us. So please go ahead, and I'm happy to follow up with a couple of questions afterwards.
Great. Can you see my screen?
I can see your screen.
Awesome. Gregor, thank you so much for the introduction. Thank you for the invitation. It's so good to be with you all today. Insurance and emerging markets, the informal sector, which really dominates the two sectors that I'm currently engaged in. One is construction and the other agriculture, are really a microcosm of the issues that revolve around providing insurance for not just these sectors, but the informal sector as a whole. The challenge obviously has always been, how do we reach the demographic that needs us the most, needs the resources, needs the protection, needs the ability to be able to grow their business, to be able to gain knowledge, especially when they're tasked with some of the most important aspects of society. As everyone knows, housing has been a top 3 to top 1 problem globally for the last 100 years. Agriculture couldn't be more important today with what's going on in Ukraine and their impact in the market, and how African farmers now have to pick up production in order to be able to fill the gap, along with so many of the other countries that are agriculture centric. Essentially, both iBuild and Karimi are platform economies. When we say platform economies, if you live in the United States or you live in somewhere in Eastern Europe, you have the ability, if you're looking for construction services, to find them, to be able to understand their capability. Generally speaking, they're highly regulated, have a skill set that's identifiable. You may not always be happy with the result, but at least going into it, you have an idea of essentially how that is going to take place. What iBuild does is it essentially creates that ecosystem that doesn't exist in emerging markets. Our platform economy essentially consists of modules that represent what we would consider to be a well-developed ecosystem. And those modules are accessible via the Google Play Store. There are desktop versions depending on who you are within that hierarchy. And what we've done is we've embedded an enormous amount of tools to help each of those segments to be able to be better at what they're doing. Not only to be able to be better, but to reach the audience that they really need to reach. So as an example, workers can now create profiles, electronic CVs. They can add pictures of work they've done previously. They can reply to jobs that are posted by contractors. The entire app is geotagged. So if you're working in a particular geographical area and that's the only area you want to, you can indicate that on your profile. Contractors can now respond to requests for quotes from both consumers and from developers. They also can be tied into finance. We have several financial institutions that essentially are incredibly interested in being able to manage their money into the project to ensure that there's no diversion, that the project essentially is progressing on pace. And then, of course, for government programs, this is a godsend. I don't know any other way to describe it. World Bank publishes statistics annually about construction and affordable housing, and almost 55 cents of every dollar disappears that's applied to the affordable housing problem. Yes, that's right. More than half of the money that essentially is invested in affordable housing just vanishes in thin air. So the ability to be able to use technology to manage those programs, and we have one program in India, it's the management of self-built construction of 1.5 million homes in Andhra Pradesh. It's part of a larger initiative by India to construct more than 30 million homes over the next 10 years. Only technology can essentially take on challenges such as that. Because obviously what technology does is it creates a framework, and that framework dictates what can and cannot be done. Having the ability to have progress reporting with geotag photographs, to be able to chat with anyone that's on your project. In Mexico, we just launched Construye Paisano, and Construye Paisano is an effort with one of the largest government banks that's responsible for providing credit to all the MFIs in Mexico. It's a program that allows paisanos, Mexicans living abroad in the United States, to be able to send their money to Mexico using the iBuild platform, hire a contractor, buy materials, see the project essentially moving in real time, pay only when milestones are being completed, and the government of Mexico is allowing several of their MFIs to participate by providing loans to these Mexicans living in the US to accelerate the construction of their homes back in Mexico. And we think this is the start of something really big. As everyone probably knows, remittances are a huge part of the economic engines of many countries around the globe. Last year, 56 billion was transferred to Mexico, more than 26 billion to Nigeria, just to name a few. And I'm not going to go too much further in depth. There may be some questions about iBuild in particular. Karimi essentially is aggregating farmers, aggregates, providing the highest quality materials to improve their ability to grow better, but also cutting out the oftentimes half a dozen middlemen that siphon off the profits that, of course, allow farmers to essentially earn more money for the difficult work that they do on a regular basis. It also is a platform that allows for those products to then be sold directly into the market, both consumer and business. And technologies such as these really are becoming tools to introduce new products. One of the things that iBuild does is it provides also access to services. One of our partners in Kenya is Britam Insurance. And Britam essentially partnered with us because of the difficulty that they've had reaching the informal sector. And it's not from a lack of demand. So about a year and a half ago, maybe it was about 2 years ago, we embarked on a study with Cenfri to really codify the need to aggregate data around the desire the knowledge that people have about insurance. And I'm not going to go through every one of these categories, but suffice to say the desire is there. The understanding of insurance is really where the gap is. And the other piece is technology such as ours help to target very specific groups to better help insurance companies to identify better products. The real gap, to be honest with you, is on education. Oftentimes when you talk to individuals, they have no idea what insurance is, let alone why they need it. They've survived for so long without using insurance products, but once you drill down into their daily life and the challenges that they face, and you have an opportunity to explain to them what the real benefit of insurance is, all of a sudden the light bulb goes off. And that really is the challenge. How do we get the attention of the informal sector and have enough time to really educate them on the value of insurance for them? Because it's not from a lack of interest. I can tell you that when we first launched the initiative with Britam, we were getting about 1,500 leads a month, which is a pretty large amount for an audience that has no idea what workman's accident insurance is. They certainly know what health insurance is, but really this was a focus on quality of life outside of health insurance. Very low cost policies, sometimes no more than what would be equal to $1 a month. Yet there was still a difficulty in the audience of the informal sector in comprehending the real value. And this is really a challenge. It's a challenge for insurance companies. Strategically, how do you attack the largest segment of the market? And if you talk to any insurance company, and I'm sure Natalia can back this comment up, it presents the largest opportunity, but the most difficult segment to crack. Because obviously, you know, print formal certainly to those types of platforms. So that's where the real challenge is. How do we educate? How do we present the product in a way that allows them to really understand how insurance can improve the quality of not only their lives, but of their loved ones? Because if someone loses their job, it's not just them that it's affecting. It's their wife, it's their children, it's their extended family that they may be providing support to. And this is just a slide from our Britam Insurance Initiative. These were the various types of coverages that were available. And some of them were extremely affordable. And the customer could make them using the iBuild wallet. So if they were getting paid for a particular job, they could save money, they could sock it away in their wallet, they could program automatic payments to be able to make those payments. But I have to say that the program has had uneven results. Now part of that obviously was the pandemic. There wasn't very much going on in the construction world during the pandemic. But now that we're starting to emerge, we're working with them and with some of our other insurance carriers to create more relevant marketing approaches to this particular sector. We know from our experience how we have been able to reach them in improving, as an example, their knowledge of construction, which of course is very important. It allows them to be able to get better jobs and be paid better. Insurance still has a challenge in reaching what I would consider to be, and statistically is, the largest segment of the market, but also the largest segment that has not been reached to date. I'll stop there.
Thank you, Lou. I think that was very inspiring. And I mean, the construction industry is, I guess, a very hard nut to crack and to operate in. for all the challenges you have described. And I'll take with me that the digital platforms, be it iBuild or be it Karimi, are basically tools or opportunities to introduce different products. And I think one thing from the insurance world, we are still kind of thinking differently, is that we think too much in financial products, including insurance on the one hand, and all these other real world tangible products, and kind of think as those two things as two very separate things. And I think we've seen a couple of examples, especially with MSMEs, and I think you've presented just one, where to more think these two worlds together is actually a prerequisite to reach MSMEs with insurance. Before I'll turn again to Natalia, maybe one follow-up question to you. I mean, you kind of hinted to the risks you have in the construction sector at the one slide, but maybe can you emphasize a bit more, be a bit more specific on those risks that you can address through your insurance program that you frequently see in the construction or affordable housing construction ecosystem?
Well, I think, one of the things obviously is there's a real opportunity for small SMEs, small contractors that are looking for project-based insurance, ones in which they're trying to charge more, quite frankly, for what they believe is a better service. But of course, one of the questions or one of the products that would help them to convince their customer is the ability to be able to say, my work is insured. If you don't like it, I have protection for you. And obviously that's a very strong selling point for that type of product. On the other hand, you have a workers' compensation product, which for young people that don't get hurt very often, it's an afterthought, or if it's a thought at all, quite frankly, until the one time that they really do get injured and they're out for an extended period of time. Then if they had heard of your product, then they probably would have wished that they had listened a little more attentively. I think the other thing is that insurance companies play an important role in changing the habits of people because of the necessity to conform to certain aspects of those policies. One of the ones that I would love to see them take a more prominent role, as an example, is in workplace insurance. And I won't name the country or the city or the project or the developer or the contractor, but oftentimes when I go to construction sites, I'm not sure whether it's construction or demolition that I'm witnessing, because the amount of risk associated with even walking around those projects, if I was an insurance company, I would be terrified because I know I'm going to be getting an unimaginable number of claims, and they're not going to be small ones. And this really is an issue because that has a direct impact on rates, and rates have a direct impact on reach. So that would be my comments.
Thank you, Lou. I would like to turn back to Natalie for now. I think Lou has already kind of highlighted a couple of challenges they have seen and they have approached. And Natalia, I think we haven't really touched the challenges you may have approached in your approach in reaching small businesses with insurance. Maybe you can give us a bit of a background on that.
Claro, Gregor.
Of course, Gregor. It is a little bit what I was mentioning before. One of the challenges is to continue attracting them. And also somehow leveraging everything that they know how to do well, so that we also can support them and educate them through an insurance culture. We have to make them see us not as an expense, but as an investment. And that is a challenge because MSMEs are always investing to be sustainable in the long term. And as we've seen in world statistics, in some countries, MSMEs won't last more than a year. In some other countries, if they do well, 3 years. So if we manage to keep them going and we can provide them something more interesting, almost as their partner, through education and developing a culture of insurance, we can make them see that we are not actually an expense, but an investment so that they can be sustainable. Because if anything happens, at the end of the day, it's going to be different from them if they have all the resources, if they don't have all the resources to cover for the expenses, or if they have someone who will cover them with those losses. And then something else, as I said, we have over 52% of our portfolio is micro companies. So another challenge is to continue evolving so that we can offer those micro companies or natural persons the services they need. To give you an idea, in Colombia, our micro companies are almost 2 digits. According to a survey carried out this year or a year ago, in December, we had 1.4 million micro companies, and 80% of those are natural persons. So if we continue to get to know them, we will actually be able to provide them with offers and products, not just the product, but also providing them with services, education, the insurance, of course, as well. But that's just one of the many things we can provide them with. That will improve the country's economy. It's going to allow our customers to be more sustainable and stay in business for longer time. So everyone benefits from that. Those were the challenges that we faced. Well, of course, among others, Gregor.
Okay, thanks, Natalia. Maybe one last question to that. And how far can you leverage the fact that you are in a group with a financial institution and you're using the financial institution as distribution partner? Do they basically know the small businesses better? Can you actually take advantage of them being close to these small business customers?
Pues Gregor, creo que sí.
Well, I think we're blessed to have them, because rather than leveraging them, what we do is getting to know our customers, as you said. We do have a captive market through our bank, and then we can easily wing it. They're our main distribution channel. And what makes it interesting is that we also discovered how we can work together seamlessly. So we can see how we provide our offer, and our offer becomes an attribute in the financial offer. So in the end, we are all watching everybody's backs. And that's how we leverage the ecosystem. That is to say, if they take our MSMEs and they're going to hire a financial product, then for the MSME, it's more important to take care of their equity, the equity that they're going to be using when buying that financial product. Am I explaining myself? So they need this financial product to buy the machinery. The machinery is going to be the engine that will be moving the parts of the MSME, because without that machinery, the MSME cannot exist.
Yeah.
Therefore, we provide them also how to take care of that. So at the end of the day, everyone wins. So we're doing it in that way. For us,
Okay.
it is very, very nice because we can grow with them, we can support them, and they can grow with us. So today we do everything through that distribution channel. We have a force of over 100 people who are only dedicated to providing this offer to MSMEs. just as I mentioned. And this year we escalated a little bit into production. So everything will be assisted. And we're going to be testing how an MSME will be buying by itself over the internet. That is a challenge, statistically speaking, but that is what we're interested in doing and what we want to do. We want to make sure our MSMEs are happy.
Okay, thank you, Natalia. I think that was quite insightful. Before finishing up and giving the ball back to Jeremy, I would like to pick on someone in the audience, and that is Iker Yabres from the Microinsurance Catastrophe Risk Organization, which we all know under the name of Micro. So I hope Hugo or the Min team can do its magic and unmute Iker. Iker, I would. Hi, I can hear you very well. Perfect. I know that you as Micro, you are also targeting small businesses with your approaches in some countries of Latin America and the Caribbean, and you have a distinct focus on climate-related risks. And I would like to bring that aspect also into the discussion here. So according to your experience, how do climate-related risks, for example, floods or storms, affect small businesses in the areas you operate? And what role can insurance play to actually mitigate these risks?
Yes, it's a good question, Gregor. I think it's like the rest of insurance, right? It comes in the form of direct and indirect losses. Of course, on the one hand, if you think about a hurricane, a tropical cyclone, a storm, it can affect directly, let's say, a small shop by a power outage, right? That can affect the goods that store sells, and the water might cause damage directly to their assets and inside the shop. And on the other hand, business owners will also suffer from indirect losses. In this example, the shop would suffer because if they need to generate the electricity that has a cost, an additional cost to rent the plant, to generate the electricity, to buy the gasoline to power that plant. And if they're not able to do that, well, they will suffer also because they will have to drive longer to get to the same places where they got their goods from or where they sold them. And also because they will have lower income, right? The people around them will not have as much to spend on their goods and services as before. So I think insurance has a very important role to play here. Of course, not as the only product, as part of a risk management strategy, but especially focused, as we all know, in high severity, low frequency events. We wouldn't think of climate insurance for events that happen every year, even if it's the worst rainfall or the worst wind of the year. We would think in climate insurance for events that happen every 5, 10, 15, 20 years, and that affect not only one shop in the town, but affect the whole community.
And Iker, I think you are also partnering with financial institutions, MFIs and others. What's your experience in partnering with financial institutions to serve small businesses? Are they well positioned to actually deliver insurance, and what are their incentives?
Yes, well, I think there's much to say here. I'm glad that the links of the publication that the Microinsurance Network did on this subject were published here in the chat, because I encourage people to read them all. But just to mention a couple of words, I think it's a win-win situation with financial institutions, right? On the one hand, the financial institutions that do understand this double benefit of protecting their portfolio plus helping construct a risk management strategy for their clients, well, they will not charge as much commission as other products or as other partners that are only interested in the commission, are only interested in selling it. So this, of course, increases the product value for for clients. And of course, clients have very high in their priority list to ensure access to good credit, cheap credit, low interest rates that they have had access to for many years in a row in several times, right? So this fidelization of clients is important through this type of insurance products. And what we've seen is that insurance products help protect this relationship between the lender and the borrower. In our experience, this spiral of win-win situations has allowed us to reach over 1,000 clients in Mexico, over 20,000 in Colombia. One of our partners is actually Grupo Bolívar with their Tranquilidad Rural product. Over 25,000 in El Salvador and over 50,000 in Guatemala, only in our credit-linked products, right? So we've seen this as one of our most successful partnerships.
Thank you, Iker. I would love to go more into detail on that, but as everyone has probably realized, we are going towards the full hour. So thank you, Iker, and thank you, Natalia, and thank you, Lou. I'll pass it on to Jeremy for a brief wrap-up.
Thanks, Gregor. So thank you, everyone, for joining. I'm just going to share this final slide so that you know how to reach the microinsurance network should you not be familiar. But it's really great to see quite a number of people joining this discussion and very active questions and Q&A. So thank you for your participation, much appreciated. I think these notes are really part of an ongoing learning journey with a best practice group with the microinsurance network. I think it's been really exciting to see the growth in microinsurance and microinsurance pilots, MSME insurance and MSME insurance pilots over the last couple of years since we started this group. I think there's always been a lot of interest in MSMEs, but I think in the MSME insurance space, I think we've seen real growth and on the ground products and pilots coming, at least starting or coming to fruition more and more in the last couple of years, which is really good to see. I don't think we've fully unlocked the solution as the numbers, or unlocked the problem as the numbers indicate in terms of lack of insurance. But I think, you know, like we've heard from the speakers today, I think there are some really interesting and exciting developments emerging that we can all learn from. So I'd like to give a big thank you to Gregor for hosting the discussion today, and then particularly to Natalia and Lou for your invaluable contributions. Very, very much appreciated. And I know for some of you it was quite a challenge to make this call. So we really appreciate the joining and sharing all your learnings. I think many of the people who are joined are probably already members of the Microinsurance Network. So anyone interested in joining the best practice group for MSMEs, please do send Hugo an email, and we'd love to have more people engaging and part of that discussion. And then those are people who are not part of the Microinsurance Network. I'm sure the men would be very happy to welcome new members. So feel free to reach out to the men. There's an email on the slide to learn more about the men and the opportunities as partners. But yeah, I'll leave it there. And thank you very much to everyone for joining. And we would, any questions or comments that you may have on the notes that we published, please do reach out or look forward to further discussions. But otherwise, have a lovely evening wherever you are in the world. Thanks very much.